Hi there, and welcome to Talk ETFs, ETF.com's weekly video series. My name is Sumit Roy, and I'm Senior Analyst for ETF.com. This week, I'm talking with Vivek Tanneeru, Portfolio Manager at Matthews Asia. Vivek, great to have you on the show.
Thanks for having me, Sumit.
Absolutely. So I'd love it if you can start by telling us a little bit about Matthews and the firm's expertise in Asia and emerging markets. When did Matthews get into the ETF marketplace?
Yeah, so Matthews is a privately owned, long-term equity investor focused on delivering Asia and emerging markets investment solutions for our global client base. We were incepted in the early 90s, so we have 3 decades plus of operating experience in our focus markets. We have 30 people at the firm on the investment team side, most of whom have either been born, raised, educated, and or studied in our focus markets. So we launched our first ETF almost 2 years ago, and today we have about 12 active ETF offerings spread across emerging markets, Asia, and single country funds. So we have about 4 emerging markets active ETFs, 3 Asia active ETFs, and 5 single country ETFs.
So I want to get into that. Matthews recently launched the Discovery Active ETF suite. Can you tell me a little bit about that, and how are you involved with that, Vivek?
So we launched our Discovery Suite very recently. It covers 2 products focused on small caps. One is an emerging markets small cap focused fund, Emerging Markets Discovery Active ETF, ticker MEMS. The second one's China small cap focused China Discovery Active ETF, ticker MCHS. Discovery Suite really is the purest expression of our expertise at Matthews in researching small companies, going back to our inception. This really is predicated on our strong on-the-ground research capabilities, as well as our capabilities in finding small companies that can potentially grow into mid and large size companies over a period of time. I personally manage the EM Discovery Active ETF.
So that's interesting. What makes emerging markets small caps so attractive to investors, Vivek?
I'd say there are 3 key things that investors should focus on when thinking about small caps. Firstly, emerging market small caps offer a very differentiated exposure to emerging consumers in Asia and outside of Asia. We often find that local entrepreneurs and local managers are much better at understanding the fast changing consumer preferences and then introducing products and services that cater to those changing needs and preferences. We're finding some very attractive investment opportunities in areas such as travel services, cosmetics, and restaurants. The second reason is really centered around innovation. It might surprise a lot of people that Asia is the epicenter of global innovation. Asia accounts for about 2/3 of the patent filings. This really has led to an explosion of new business creation in areas such as biotechnology, medical devices, semiconductors, and software. And that's really proven to be a fruitful ground for us to find very attractive opportunities. The final reason to be excited about EM small caps is this idea around discovery alpha. Roughly half of our universe is not covered by the sell side. So that leaves companies like ours and teams like ours that can do very good on-the-ground research and the ability to discover stocks that are able to compound attractively over the long term while not paying much for it. I think for all those 3 reasons, emerging markets discovery approach could be very interesting for investors.
So Vivek, whenever investors hear emerging markets, their thought always goes to, China and how it's underperformed quite a bit over the past several years. How have you managed through the volatility we've seen in the Chinese stock market? And do you think China is still an investable market?
Let me answer the second question first. We absolutely believe China is a fantastic long-term growth opportunity for equity investors. It is the world's second largest economy, a colossal consumer market. So if the company has the right product and service run by the right people that are well incentivized, we feel that companies can really grow their sales and profits very aggressively, consistently over long periods of time. In my mind, China is the only market outside the US where companies can, with any amount of confidence, say that they're able to double, triple, quadruple their sales over the following 3, 5, 7 years. Coming to the China market performance over the last 3 years, it's indeed been a particularly difficult time. But if you look at our approach, we've managed to generate meaningful alpha over the long term in China, really based on two things. Firstly, being very focused on bottom-up process, trying to find stocks that are able to grow earnings despite external headwinds. And secondly, really being very focused on risk management, really trying to avoid companies that might be the crosshairs of geopolitical tensions, human rights violations, regulatory risks, etc. And also really being focused on finding companies that are well governed and run by management teams that are very well incentivized.
That makes a lot of sense. And Vivek, if China is the part of the market where investors are really concerned, the part of the market that investors are really excited about is, of course, AI. It's on everyone's mind these days. What impact does AI have on emerging markets?
So the impact of AI is being most acutely felt in markets like Taiwan and Korea. Those two markets make most of the world's most advanced memory and logic chips. They also package them, assemble them, and test them. So we're seeing very strong tailwinds in both of those markets in terms of both very strong increase in the dollar content as well as increase in the profit margins, thereby leading to a very strong profit growth. So we've seen that play out already in those two markets in particular over the last 15, 18 months. And going forward, we remain convinced that the competitive advantage that the companies in the supply chain have in those two markets will endure. And as the AI usage spreads out to consumer devices, we feel that the opportunity expands for some of the companies we're invested in.
So Vivek, your ETF, the Matthews Emerging Markets Discovery Active ETF, it seems very compelling. But how do you think an ETF like that, MEMS is the ticker, fits into an investor's portfolio?
I think this ETF can do two things for client portfolios. Firstly, really add a less correlated idiosyncratic source of alpha. And secondly, be really a great risk diversifier, because most of our exposure in the strategy in the ETF is to domestic consumption in emerging countries. So I think both from a return and risk perspective, this really does have a role to play in investor portfolios.
Fantastic. Well, we're going to have to leave it there. Vivek, you gave us a ton of great information. Thanks so much for your time.
Thank you, Sumit.